Hi, I'm your friendly neighbourhood bookkeeper, and I'm here to give you some guidance on how to keep good record keeping. It's very important when you're running a small business and you're a sole trader that you keep good accounts and records. This will help you when you eventually go to your tax agent and give him all your paperwork, him or her, and if you've kept very good records through the financial year, then it's quite possible that he will be able to produce a very good set of accounts and get lots of money back for you from the tax man. Now, the first stage of good bookkeeping is to make sure you give correct invoicing. Whenever you make a sale or you sell one of your works of art or a piece of sculpture, you would always issue a sales invoice or a cash receipt for that amount that you have sold. And if you are registered for GST, then the amount that you are invoicing would actually have GST in that component, and you would have to issue a tax invoice. On that tax invoice, it should have your name, your address, your ABN, and the words tax invoice. And then a brief description of what the product is that you are selling and the amount of the goods you are selling. And within the amount of the goods you are selling will be 10% GST, which is in fact 1/11 of the amount that you are selling your goods for. Now, of course, the next stage, once you have made a sale, is you need to write the information very carefully in a sales journal book. That's a book which it can either be on an Excel spreadsheet that you've devised yourself, or you can go to any shop and you can actually purchase a hardback leather ledger account which will allow you to write up all your sales for the day. And for example, you may have sold a painting for $2,200, here's hoping, and within that amount you're going to make a sale for $2,000, and you're also going to have an amount of $200, which is the plus 10% of the $2,000, which is GST, which you are going to collect on behalf of the Australian Tax Office, and so your total amount will be $2,200. The $200 is your cost of your sale, and the 10%, which is the $200, goes to the tax office, and that will actually go on your BAS return, which you will complete quarterly. And you will obviously have certain goods which you have purchased which you also include GST, and for example you may have bought a camera, and that camera might have been $500 and plus 10%, $550. Now the $50 can be offset against the $200, and the amount that you will most likely pay over then to the tax office is the difference between the $200 and the $50, which is $150. Now, the reason why bookkeeping and keeping good accounts and records is important is mainly so that you can account for all your sales and all your purchases, and the correct amounts can then be transferred to the BAS return. It also means you've got good records to present to your tax accountant at the end of the financial year.